Hello, this is Matt on the Moon Family Sedan channel. Here's a headline from you today. XRP becomes largest trading token on Korea's major exchanges. What is this anomaly? I'll tell you exactly what the anomaly is, and we've certainly seen it before. There's also this headline from you today. Pro-Ripple lawyer reacts to imminent $5 trillion buying pressure for risk assets. And they're talking about none other than attorney John Deaton. Got that and a couple other things for you. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. And as I record this video, things are fairly quiet. It's a Sunday, though, that's frequently the case. XRP at 45 cents, Bitcoin at 27,897 bucks. Market cap for the asset class 1.17 trillion, and Bitcoin dominance where it's been for most of the last week or so, 45.7%. Crypto Fear and Greed Index 64 out of 100. So people are feeling fine today, but wouldn't be surprised to see some turbulence throughout this weekend if it's going to come. Probably start closer to the beginning part of Monday. So what's going on here with this XRP anomaly? What's going on? Excuse me. What's going on with all this price action, in particular in Korea? Check this piece out. According to CoinMarketCap, XRP has taken the top spot in terms of trading volume on South Korea's two major exchanges, Upbit and BitHum. In the last 24 hours, XRP's combined trading volume on the two platforms totaled nearly $348 million. So just pause there to put that in perspective. At the time I'm recording this, XRP's 24-hour volume, it's roughly $1.1 billion. So when you're talking about those two major Korean exchanges hitting $348 million, that's in the neighborhood of about a third of XRP's current 24-hour volume. So that's absolutely massive. Anyway, piece continues. The figure was achieved in pairs against the South Korean won. As a result, the volume of XRP traded on Upbit exceeded that on Binance, the largest cryptocurrency exchange, by nearly 100 million tokens. The anomaly was also noticed by members of the XRP community when following it. The price of the cryptocurrency itself rose 9% at one point yesterday amid a reddened crypto market. And that's always nice to see. I never mind seeing XRP up when everything else is flat or down. It happens from time to time. But why is this occurring in the first place? Well, look, this is a known factor, and it's actually known in crypto in general as the Kimchi Premium. In fact, here you can see an article from January 9th, 2018, because those of you that were around are going to remember this, and it pissed everybody off. But given that there's a premium in the Korean markets, it can result in a pretty noticeable disparity. And back in the day in 2018, and you're talking 5 days after XRP hit its all-time high, CoinMarketCap removed the Korean markets, and knowing that in Korea, XRP is basically outside of Bitcoin, the most popular crypto on the planet. And there was a greater premium there than anywhere else on the entire planet. So what they did was they took out Korean markets on CoinMarketCap, and it made it look in the snap of a finger, just instantly, as though the price of XRP had plummeted. Because when you take out those exchanges in Korea that have the way, way, way higher prices because there's greater demand out there, prices plummeted, and it caused, to some degree, caused panic. And so why are there higher prices? Well, again, just understand that individual cryptocurrency exchanges, they're their own contained ecosystems. And yes, they're aware of other ecosystems, other exchanges, which have different prices. There will always be different prices on every single exchange on the planet. But since people on one exchange are paying attention to prices on a different exchange, prices pretty well stay in check through arbitrage. Because if there's a disparity in price, then if somebody notices, hey, I can buy this asset cheaper on this exchange, move it to that exchange where people are paying more for it, hey, there you go. But that closes the gap. Now, when it comes to Korea, it's apparently historically been harder to make those types of arbitrage moves, resulting in greater disparity in prices. And so it just has to do with what trading pairs are available on Korean exchanges at the moment, and how much crypto, XRP, Bitcoin, pick your crypto, how much is available in those contained ecosystems, those individual exchanges at any given moment. And the market dynamics are different. That's how you get these disparities in price. It's no more complex than that. That's why this happens. Well, other than to stay also, state also, and this is important as well, XRP is wildly popular there. That's why, so that given there's so much demand, but it's just the demand is just centered on those exchanges because that's what those citizens have access to. Duh, and so that's why that happens. That's why when those markets overseas in 2018 were removed, and again 5 days after XRP hit its all-time high, it made it look as though XRP had a market cap drop of $20 billion. And again, that's in the snap of a finger. XRP dropped by $20 billion. Now, for frame of reference, at the time that I'm recording this, the market cap for XRP is $22.9 billion. So basically, what is currently XRP's entire market cap was just like in the snap of a finger evaporated. That's what happened in 2018. And it most harmed the position of XRP visually anyway. And David Schwartz even tweeted out about it. They shared it in this article from 2018. David Schwartz wrote January 7th, 2018, which means so this means it actually occurred 3 days after this. So the article is from the 9th, but this occurred 3 days after then XRP's all-time high. And David Schwartz wrote, CoinMarketCap's decision to exclude Korean prices from the displayed XRP price made the price appear to drop, likely triggering some panic selling. Look closely at the data and don't be misled. And no doubt it alarmed people at a minimum when they viewed it. I do kind of wonder to what degree it would have caused actual panic selling, though. I know a lot of people speculate that, including David Schwartz. It could certainly be right. But I'm just sitting here thinking, if I'm a person who is panicked because I see the price, I think it's dropping. Oh my God, $20 billion in market cap just evaporates. What do I got to do? I got to sell. I got to get out of my XRP position. If I'm one of those people, then I hop on my exchange where I've kept my crypto because I never even bothered to take it into self-custody probably. And then what do I do when I get there? I go to sell, like, wait a minute. This price is way higher than what a CoinMarketCap says. What gives? Do I still panic sell? When you see, wait a minute. Because you can see in that moment, right, that obviously, even if you're a mouth breather, you'd realize, oh, the price isn't low like CoinMarketCap says. So even if you're a mouth breather, like, you'd figure that out pretty quickly, right? So I don't know. Maybe people still panic sold. I don't know. But that's what's going on with that. Now, in terms of the potential for things to move positively to the upside, here's a headline from you today. Pro-Ripple lawyer reacts to imminent $5 trillion buying pressure for risk assets. Retail investors are sitting on cash like never before, with money market funds holding nearly $5.1 trillion, according to Mark Newton, managing director and global head of technical strategy at FundStrat Global Advisors. The influx into the money markets pushed the sector's assets to their highest level on record, peaking at $5.1 trillion, according to the chart posted by Mark Newton. And you can see it's on your screen for those of you that care to look, and it visually looks impressive. And attorney John Deaton retweeted that and wrote, $5 trillion, question mark? That is a ton of cash that will rush into risk assets. Can Bitcoin and digital assets get 20%? Yeah, and great point to make. Like, I don't know what the percentage would be, but over time, of course, it gets dispersed, including into crypto. Just the broader point that I'll make, even though I think that's perfectly reasonable to suppose that, and I agree, that a certain amount, whatever, I don't know what the percentage would be, would flow in. It still is the case that, when you're talking about risk assets in crypto, that's risk assets, it's still the market behavior, it's still going to depend on what the federal government in the United States is doing. There's no indication that has changed whatsoever, despite this narrative that, Bitcoin's been increasing despite all the bank collapse stuff. And that's all true. I'm not disputing that. I'm just going to say, if something goes horrifically wrong, stocks and crypto tank. When you get black swan events, that's typically what happens here. Now, in the case of banks, you got the beginning of what could have been called a black swan event, but it was quickly fixed by the federal government to the point where, even though, yes, you had bank collapses, you didn't have the contagion effectively spread to this point. Now, if it spread dramatically and you had pure chaos, I'm not convinced necessarily Bitcoin would be doing so well. Because there'd be panic everywhere. People would be people selling everything. So, and maybe I'm wrong, but that's just the way that I'm looking at it. You guys can let me know what you think. But interesting food for thought. Either way, there's a ton of money out there that is going to be creeping into crypto over time. I just don't buy into these, scary scenarios that, these ideas that we're going to be seeing new lows for Bitcoin and pick your crypto. I think the bottom's in. unless, and that's always my caveat, unless we do have a wild card event, and then, well, yeah, of course, that would that would be something that changes from a fundamental perspective. Outside of that, if you're just looking at the charts, the bottom was in November, folks. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.